And welcome to the ETF Edge portion of Halftime Report. I'm Bob Pisani, back at the NYSE. Two big trends in ETFs this year. One hot, one not so hot. John Hoffman's the head of ETFs and Index Strategy Americas at Invesco. He joins us with more. John, clean energy, the darling of 2020. It's run into some tough times in 2021. You run two of the biggest ones out there, the solar ETF, TAN, T-A-N, and that green energy index fund, PBW, both off more than 40% from their recent highs in February. Why is clean energy stalled out?
Bob, in the months leading up to the election, we started to see flows pick up in the space and really even accelerate post-election. And these names have moved a lot from a performance standpoint. Both ETFs were up over 200% in 2020. They've pulled back, as you mentioned, a bit this year. But when we think about this transformation to cleaner energy, we think about it over decades, not days. And I joke, Bob, that after 15 years, these two ETFs are an overnight success story. We launched PBW, the Clean Energy Fund, in 2005. We launched TAN, the solar ETF, in 2008. And so we really opened up the sector for investors. These were the first ETFs in the space. Back then, the companies were a lot smaller. This was an emerging sector. Fast forward to today, it's still a relatively new space. If you add up the market cap, Bob, of all the names in PBW and exclude Tesla, less than $500 billion space. And so when you think about the move to sustainability and clean energy, and this is not just a U.S. thing, this is global, the regulatory pressure, the societal demand, there's a lot of money moving into this sector. And it's difficult to pick a single stock in the space. We see a lot of investors like to buy the index, get exposure to the entire theme. And Bob, we think about this over the long horizon. The trend to cleaner energy, solar power, water resources, greener buildings, these are long-term themes here, Bob, that we're seeing play out.
Okay, John, we had some breaking news, so we got to let you go here.